Hyundai's journey in Russia began with optimism, ambition, and a vision for the future. The company saw Russia not just as a new market, but as a land of opportunity, a place where innovation and local expertise could come together to create something remarkable. In St. Petersburg, Hyundai invested heavily to build a state-of-the-art factory, a gleaming symbol of global partnership and local opportunity. The facility was equipped with cutting-edge technology, designed to meet the highest international standards, and became a point of pride for both Hyundai and the city itself. The plant produced popular models like the Hyundai Solaris and Kia Rio, vehicles specifically tailored for Russian roads and harsh winters. These cars quickly became favorites among Russian drivers, known for their reliability, affordability, and ability to withstand the country's challenging climate. Beyond the cars themselves, the factory provided thousands of stable jobs, supporting families and communities across the region. Hyundai's presence helped transform the local economy, making it one of the top foreign automotive brands in Russia and a major contributor to the city's industrial growth. The Russian government actively encouraged such investments, seeing them as a way to modernize the country's industry and foster international cooperation. For years, the factory thrived as a hub of innovation, economic growth, and cross-cultural exchange, drawing praise from both local leaders and global observers. But history had other plans. As the years passed, geopolitical tensions began to cast a long, uncertain shadow over the plant's future. News headlines grew more troubling, and the sense of stability that once defined the factory started to waver. The stability and growth that had seemed so certain were suddenly threatened by forces far beyond Hyundai's control. The plant, once a beacon of hope and progress, now faced an uncertain fate as the world around it changed rapidly. The story of growth and partnership was on the verge of a dramatic, irreversible turn. One that would reshape not only Hyundai's future in Russia, but the lives of thousands who had come to depend on its success. In early 2022, the world watched in disbelief as the invasion of Ukraine unfolded. The shockwaves from this conflict rippled far beyond the borders of Eastern Europe, sending tremors through the global business community. Companies everywhere scrambled to assess the risks, and the uncertainty was palpable in boardrooms and on trading floors around the world. For many international firms, the crisis marked the beginning of a new era of instability and difficult decisions. Hyundai, with its major Russian operations, found itself at the center of this storm. The company had invested heavily in its St. Petersburg plant, which had become a cornerstone of its European manufacturing strategy. But as the conflict escalated, Hyundai faced an impossible situation. By March, the St. Petersburg plant was forced to suspend all activity, leaving thousands of workers and suppliers in limbo. The official reason for the shutdown was a total collapse of the supply chain. Sanctions and the ongoing conflict made it impossible to import the essential components needed for production. Containers full of parts were stranded at borders, and warehouses that once bustled with activity now stood eerily empty. The intricate web of suppliers and logistics that kept the plant running had unraveled almost overnight. The factory, once a hive of activity and innovation, fell silent. Machinery gathered dust, and unfinished cars sat idle on the assembly line. Each day of inactivity brought mounting financial losses, but the risks of restarting operations were simply too great. The sense of uncertainty grew, as employees and managers alike wondered if the plant would ever reopen. International pressure mounted, and the reputational risks of continuing operations in Russia became impossible to ignore. Global media coverage intensified, and investors demanded answers. What began as a temporary pause soon looked permanent, as Hyundai weighed the consequences of every possible move. The company faced not only financial losses, but also the challenge of protecting its global brand image. The St. Petersburg plant became a silent monument to a lost era of global commerce and cooperation. For Hyundai, the future was uncertain. The company now faced a painful choice: wait in limbo, hoping for a resolution, or make the difficult decision to walk away from its Russian assets for good. The world watched, knowing that whatever Hyundai decided, the impact would be felt far beyond the factory gates. After nearly 2 years of silence and uncertainty, Hyundai made a decisive move in January 2024. The company sold its Russian assets, including the once bustling St. Petersburg plant, to a little-known local firm, Art Finance, for just 10,000 rubles. That's barely over $100, a price so low it's almost hard to believe. But this wasn't a typical business transaction. It was a symbolic gesture, a reflection of the extraordinary and challenging circumstances that had gripped the Russian automotive industry since the start of the Ukraine conflict. The St. Petersburg plant, once a symbol of Hyundai's global ambitions, had become a costly liability, sitting idle and draining resources with no clear path forward. The sale price was purely symbolic, never meant to reflect the true value of the factory or its equipment. In reality, the plant was worth hundreds of millions of dollars, but the ongoing sanctions and political tensions made it impossible for Hyundai to find a foreign buyer. The company faced mounting losses as the factory sat unused, its future clouded by uncertainty. For Hyundai, holding onto the plant was no longer an option. It had become a financial and strategic burden. With no possibility of selling to international investors, Hyundai's only way out was to transfer ownership to a local entity. The deal resulted in a staggering loss of over $200 million, wiping out years of investment and effort. Yet for Hyundai, this painful decision was necessary. It allowed the company to finally cut its losses, close the chapter on a now toxic market, and focus on more stable regions. The sale was not just a financial transaction, it was a strategic retreat in the face of overwhelming challenges. Hyundai's move was not unique. Other major automakers like Renault and Nissan had already made similar exits, selling their Russian operations for nominal sums. These symbolic sales became a pattern, as global companies scrambled to limit their exposure and losses in a rapidly changing environment. The exodus of foreign automakers marked a dramatic shift in Russia's industrial landscape, leaving behind empty factories and uncertain futures for thousands of workers. For Russia, these deals kept vital industrial assets in local hands, preserving the infrastructure for future use. For Hyundai, it marked a painful but necessary end to its Russian chapter, a stark reminder of how quickly global ambitions can be upended by geopolitics. The story of the St. Petersburg plant is now a cautionary tale for international business, showing just how high the stakes can be when the world changes overnight. The 2024 sale included a buyback clause. Hyundai could reclaim the plant within 2 years if conditions improved. But by early 2026, nothing had changed. The conflict in Ukraine dragged on, sanctions remained, and supply chains were still broken. The risks of returning were overwhelming. Hyundai let the buyback option expire, making its exit final. The company chose to focus on stable markets, joining a broader trend of multinationals retreating from Russia. The decision was pragmatic. The potential rewards no longer justified the risks. Hyundai's departure was not a pause, but a permanent pivot away from a once promising market. Exiting Russia cost Hyundai over $200 million and a key market. The St. Petersburg plant had been central to its European strategy, supplying not just Russia but neighboring countries. Its closure forced Hyundai to shift production elsewhere, increasing costs and logistical complexity. The exit also underscored the risks of global expansion. Political events can upend even the best-laid plans. Yet by making a clean break, Hyundai protected its global reputation and can now focus on growth in more stable regions like electric vehicles in North America and Western Europe. Before 2022, Russia's car market was vibrant, with foreign brands dominating sales and creating thousands of jobs. The invasion and sanctions changed everything. International automakers exited, leaving a massive void. Chinese brands like Chery and Geely quickly filled the gap, their market share soaring above 50%. Russian consumers lost choice and faced higher prices, while domestic brands like Lada struggled without Western technology. The market shifted from west to east, but at the cost of diversity, affordability, and quality. After Art Finance took over, the St. Petersburg plant was rebranded as AGR Automotive. To restart production, they used leftover Hyundai and Kia parts, assembling familiar models under a new brand, Solaris. Cars like the Solaris HS and Solaris KRS hit dealerships, offering Russian buyers trusted designs with new badges. But this was a short-term fix. The stockpile of parts would eventually run out. The plant's future likely depends on partnering with a Chinese automaker, marking a full pivot from Korean to Chinese technology and Russian car manufacturing. The factory's fate deeply affected its 2,000 workers and the surrounding community. When Hyundai suspended operations, workers faced uncertainty and anxiety, though the company continued partial salary payments for a time. The sale to Art Finance brought relief for many, as jobs were preserved and production resumed under the Solaris brand. Still, the future remains uncertain. Once the leftover parts are gone, new partnerships and retraining may be needed. The stable careers once promised by a global giant have given way to a more precarious reality. Hyundai's exit from Russia is a stark lesson in the fragility of global business. Political upheaval can destroy even the most successful ventures overnight. The era of fearless expansion is giving way to caution. Companies now weigh political risk as heavily as profit. Hyundai's retreat shows that sometimes the only winning move is to leave. For countries, it's a reminder. Stability and predictability are essential to attract and keep foreign investment. The empty space left by Hyundai is a monument to a broken partnership and a warning for the future.